We are getting some numbers that are pretty important right now. We're going to be looking at the ADP private payroll data. It's just out. Steve Leisman joins us with those numbers.
Numbers. What a thought. Yeah. Fantastic. ADP is saying that private payrolls grew by 42,000 in the month of October, with a decent split when it comes to by sector. Goods producing up 9,000, service providing up 33,000. This is a question, is this the new normal we have to get used to? Is a relatively lackluster number that because we don't have the labor force growth, is this a good number relative to the labor force growth? We don't know because we don't have the unemployment size. What I don't, the household survey, what I don't like is how we got here. And this is something that's a bit of concern here. Small businesses, less than 50 workers, losing 10,000. That is the third month in a row that they have lost workers here. Medium size down 21,000 and large over 500. That's where the job gains are. I have a concern anecdotally that this is a potential tariff effect here where small business is being hurt. Also, perhaps at the consumer level, what's going on. Looking at by industry here, 47,000 for trade, transport, and utilities. That's interesting to me because I would think that would be a place that would be hurt when it comes to some of what's going on with the tariff world. Education, hospitality, and health services, that's the place we often get the job growth. Leisure hospitality, though, down 6,000. Information down 17,000. And just one more thing here. We have, I believe, the change in wage growth. And that's unchanged. And that's, what is that saying to you? Unchanged in 4.5% for job stayers, 6.7 for job changers. Tells you we're kind of like at a status quo or maybe a quiet period here in the job market. It's not going down, which would tell you there was a lot of slack in the job market, but it's also not going up, telling you it's tight. We may just be, what, can I say Goldilocks? Is that fair to say?
It's running hotter than
it's running better. People are making that. That's a great observation, Becky. And I also think that it's not declining, which would tell you there's a lot of slack in the labor market. I will say one more point, which is that this was about 20,000 more than expected. And it's also a nice turnaround from the prior month. But why listen to me when we have the unofficial commissioner of the Bureau of ADP Labor Statistics right here?
I think she's actually the official title.
The official right.
One to all of
right.
us.
That's right.
Neela Richardson is here. She is ADP's chief economist. And Neela, we are starved for information right now, so we're probably going to parse this 20 ways to Sunday. What is the big takeaways that you see from this data?
I think the first thing to note is the tepid recovery. We saw a loss in September. We actually put out a weekly pulse number last week showing and signaling a direction of tepid recovery. Now, as Steve mentioned, this is not the hiring rates that we saw at the beginning of the year. Far from it. But it is a recovery. It is not broad-based. We did see some gains in education and healthcare. We did note the gains in trade, transportation, and utilities. But there's some weakness. You see it in professional services. You see it in information services. And so, and when you think about the consumer, you see it in leisure and hospitality. And then the final point, again, Steve mentioned it, I'll put a little bit more data into it, is that 3 in every 4 workers in the United States work in a company with less than 250 employees. And so while big companies make headlines, small companies drive hiring. And so to see that weakness at the small company level is still a concern. And I think that's one of the reasons why the recovery has been so tepid.
What did you think of Steve's contention that this could be because of tariffs hurting small businesses more than mid or large businesses?
I think it's the cacophony of everything all at once. It could be tariffs and tariff uncertainty. It could be hiring. We think that small firms don't hire using H-1B visas sometimes. No, small firms are dynamic too. They're hiring talent around the world. And so that uncertainty could be a pressure point for small firms. But let's not forget the consumer. There's been so much talk about the K-shaped recovery. Well, that lower leg of that K did have some discretionary income for leisure and hospitality. That might be slowing. So there is a lot of things that could be affecting small businesses right now. The good news in terms of the overall macro story is it hasn't slowed down large company hirings to the same extent.
I'm going to make 2 very quick points. One is if you were paying attention to CNBC a week ago Tuesday, you would have had the weekly ADP report. and that would have given you a heads up that things were had kind of turned around from the prior monthly report. And we'll be back again on Tuesday with that weekly ADP number. So people want to follow that. The other thing I think is interesting here is we don't know, but 42,000 could be just the right number. Again, I don't like how we got here, but we don't know if you bring immigration down to zero and labor force growth is zero, 42,000 could be enough to bring down the unemployment rate.
And to add to that point, Neela, yesterday we spoke with John Gibson, the Paycheck CEO, who looks at small businesses and said, look, the biggest limiting factor for small businesses right now is that they can't find people to hire.
It's a challenge, and it's not a challenge in every industry. There's going to be some industries that are very, that you'll see the labor shortness and the tightness in the labor market. There's some industries where you won't. And to add to the immigration, because that's just one component of demographics, we are an aging population. That gets lost on people. Just by demographics alone, we're going to grow employment at a fraction over the next decade compared to the previous decade. So you add all this stuff up, there's some real challenges and supply shortages. So that underlying number, that's a big commentary among economists. What's the break even now that doesn't push up the unemployment rate? I think that's the wrong question. I think you have to go deeper and more granular into the data to see who is unemployed and what sectors are really seeing the tightness and what sectors are seeing the slack. So this is a time of granularity. That's why I love the ADP data. It's not a time of macro conclusions because there's so many things happening underneath the surface.
Becky, let me make one more point here. I was hoping for a number of plus 70 or minus 70.
Why?
Because the Fed is on the fence about just how weak the job market is. And they're looking for some guidance from the alternative data to say which way should we go with rates. If this were minus 70, I mean, nobody wants anybody to lose jobs, but from a Fed clarity point of view.
I'll take plus 42 in a befuddled Fed.
Okay.
And I think that's what we get. We get the muddled middle because there's no easy choices.
It's the model, what did you call that?
The muddled middle.
Muddled middle. That's where we're at right now. And that's from a Federal Reserve point of view. I think they want definitive data showing the job market is weakening and therefore we should cut.
Sorry to make
or the job
tougher.
market's fine. I could just say tune in Tuesday because we'll have more jobs data from ADP and other jobs data on Friday, too. We'll have the jobless claims.